of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we made it. Hump day's here. It's Wednesday.
We haven't made it yet, Carol. I have to remind you, it's 2 o'clock.
Come on, glass half full.
There it is.
Empty.
Okay. Okay, I'm okay. We made it.
It is Wednesday, March 10th, 2021. This is Bloomberg Business Week, live in our Interactive Brokers studio, streaming on YouTube. We've got a kind of deep show coming up when it comes to a lot of different things.
Yeah, the trade, stimulus, tax code, and bias on the surveillance hack that reminds us all how much we are being watched. That is a scary one.
I mean, look around us. I mean, and it's not just us, it's just everywhere you go. There are cameras literally everywhere.
Even ones you can't see.
Yeah, exactly. And that's what kind of is a little bit freaky. This Bloomberg exclusive, we're going to dig a little bit deeper into that. First up, though, let's get a check on the trade. Let's head on over to Charlie Pellet. We're watching you, Charlie.
I'm so glad you are. Thank you very much. I love the audience. Here's what's going on. We've got the Dow, the S&P both higher. NASDAQ is moving lower right now. It has been a volatile day for shares of GameStop, bouncing all over the place like a pinball. Let's begin with GameStop. Up now by 10%, 271.64. Was on track for a record close. Numerous trading halts. Bottom line, GameStop shares are pushing higher. AMC after the bell today, flat right now. Also reporting after the closing bell today, we'll be hearing from Oracle, down by 0.4%. Equities are advancing for a second day as the rotation into value stocks resumes. We've got the S&P up 25 right now, higher by 0.7%. The Dow close to session highs, up 447, up 1.4%. NASDAQ lower, spending much of the day higher, but NASDAQ down now by 16, a drop of 0.1%. The NASDAQ Composite Index lower now by 0.4%. Bitcoin with a $56,000 handle, up right now by 4.5%. 10-year yield 1.51%. Gold up 0.4%, 17.22 the ounce, and crude up now by 0.5%, 64.36 a barrel. Bottom line, volatility, the key word for today. S&P up 25 now, up by about 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. This portion of Bloomberg Business Week brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, you're listening to Bloomberg Business Week, and it is time for the Market Drivers Report. All right, let's get to it. Dave Wilson, stocks editor at Bloomberg News on the remote access in New Jersey. Mike McKee, international economics and policy correspondent at Bloomberg News, on the phone from New York City. Lots to talk about. Dave, though, let's set the trade for us. Charlie, breaking down those big numbers. What jumps out for you?
Well, I mean, it's a pretty broad-based advance. Everything but technology is higher among the 11 main industry groups in the S&P 500. We can start there.
So broad-based, but not tech, those big momentum names.
Oh, heck no. Not so much, anyway. I mean, you want momentum? You go to GameStop. I mean, Charlie's already talked about it a little bit, Charlie Pellet, but you look at this stock. I mean, at one point, at midday, it was up 41%, and then within less than half an hour, it was down 30%, and now it's higher again. I mean, it's interesting to see that it's coming now, though, because if you compare where GameStop is now to where it was back in January, where it really took off,
right,
it's kind of at the same point where things broke down. 5 straight gains. That was the maximum we saw in January. We've had that the last 5 days, and today you get this big move up and then boom, right back down again. And we saw the same thing happen in January. So I don't know if it's history repeating itself. I mean, we'll find out. If you get any kind of gain in GameStop today, it would be the longest streak of gains since September.
Right.
So you get past that January hurdle. I got to tell you, though, I mean, this has been something to watch all day. And you've seen...
Better than watching something on Netflix.
As well.
It really is. The chart is just wild today. Hey, Michael McKee, come on in here and talk a little bit about what we're going to see with the stimulus here. It's looking like it is a done deal. The president says he will sign it on Friday at this point. My question is about inflation moving forward. $1.9 trillion. When do we start seeing inflation numbers come from that huge cash stimulus that we are going to see? What is the data that you're looking for?
Well, yeah, it's a good you put it in terms of coming from that, because we're going to see inflation starting this month with the release of the data in April because of the drop in inflation, the negative inflation prints we got in March, April, and May of last year. So that's coming anyway. Also, we've gotten some inflation out of continually rising oil and gasoline prices. The stimulus, though, will probably come in the first half of the year. The majority of the money will get out there. They're talking about getting it out very quickly, the checks at least. And so it should go into the economy. And then the question is, do we have any production bottlenecks? Do we have supply shortages that will mean prices go up for a while? That is likely. And
temporarily, though, Mike, right?
Yeah.
It's just those gaps until production kind of picks up again.
That's the big dispute in economics, is how long is this going to last? Some people say there's so much money coming into the economy, it will last for a lot longer and rise more quickly than people anticipate, and the Fed might have to react. And that's been the drama that's been playing out in the bond market. Others say, things are really different this time with inflation dynamics because we do have globalization, and if we can't make the product here, we'll buy it from some other country. And we don't have unions that will look at inflation going up and then demand big contracts to offset it. We just have a different kind of world, the Amazon world where everybody is looking for a sale and a deal all the time. So this is going to be an interesting thing to watch play out because we've not really had this situation before. It's not just extra money for the economy like a tax cut.
Right.
It's income replacement for a lot of people.
Just want to mention a headline crossing the Bloomberg. The U.S. House of Representatives does have the votes to clear the $1.9 trillion stimulus, though the vote is ongoing, and it's something that we will continue to monitor here at Bloomberg. And obviously, it is expected to go through, and I think the president is expected to sign it come Friday. Hey, Mike, while we have you, though, there's a great story on the Bloomberg about how the U.S. stimulus package, speaking of the stimulus package, is set to turbocharge the world economy. Europe kind of lagging behind. I mean, is the world going to send the U.S. a thank you card for kind of juicing the global economy? And as a result, and we'll get Dave's view on this as well, about will investors just be plowing into the U.S. market because that's where the growth is? But you take it first.
I've just asked everybody to send me the money instead of a thank you card. But,
yeah, good luck with that.
Yeah, exactly. The world can be a little bit grateful because U.S. taxpayers are, in a sense, going to be picking up the tab for stimulating a lot of growth around the world, because one thing we as Americans like to do when we shop is buy stuff from overseas. And it's not just the finished product, but we buy the parts in South Korea, send them to China, they get assembled into something and sent here. So we're going to have a lot of imports, I'm sure, that will go up. And if we see demand for oil rise, oil prices keep rising, that helps not just us, but the price of oil is fungible. So around the world, oil-producing nations are going to see more revenue. So yes, the U.S. stimulus is going to turbocharge the world, certainly going to grow a lot more here than in other parts of the world, but it will have a spillover effect. And I guess the thing we all will do just to keep track of it is to watch GameStop stock and
is that see really if your metric, Dave?
See if everybody is spending their stimmy checks on that.
Dave, what do you think? What is the best way to see if people are spending on U.S. equities? I mean, is this something that we are going to see? Are we going to see that cash being pumped into the U.S. equity market?
Well, I mean, that becomes the question. If you think about it from a global perspective, I mean, one of the stories of the bull market that lasted from 2009 through last year is that the U.S. was really in a class of its own relative to the rest of the world. And given the amount of money that's being thrown at the economy now, at least you have to be mindful of the idea that it might happen again. Now, investors have kind of moved their money internationally in large measure. Are they going to get caught out in the end? These are the sort of issues that may be well worth watching moving forward as the money comes out from the government, and we all get it, and at least most of us anyway, you figure out what to do with it.
But to that point, and just building on what Mike was talking about in terms of the global economy versus, the U.S. economy, do you anticipate, Dave, that if essentially because of this another round of stimulus, that there's a lot more momentum in the U.S. economy, and ultimately that's where the growth is, at least for a period of time until the rest of the world catches up, and that will bring in global investors?
Yeah, that may well be the case. I mean, we've certainly seen it in the past several years. And, you know, I mean, you think about policy as an influence on markets. You know, for the last few years, it's been all about monetary policy and the Fed keeping rates basically at zero and throwing trillions of dollars at the bond market. And so, you know, if you've got that kind of fading, you would expect that, you know, fiscal policy would have to step in. But that's really been sort of missing for a while here. And so now you get to the point where $1.9 trillion is going into the economy. I mean, clearly that sort of shift is the sort of thing that would work out well for stocks potentially.
Hey, Michael, one criticism, a big criticism from Republicans has been that this package, this relief package, is way too big. What is the data that we need to keep an eye on and when will we see if it is indeed too big?
It'll be a while, but we'll look at the GDP data and we'll look at inflation at the same time. And if we see inflation rising significantly faster than anticipated because GDP is so strong, then that's kind of a clue that we got too much money flowing into the economy. But with so many people out of work, that a lot of that money is just going to get absorbed into regular spending. People who can't pay their rent or need to buy food will spend. And so at this point, it's going to take a little while to see how much extra gets spent. And that's going to depend on the virus, too. You know, when do you feel comfortable going out to a restaurant?
Right. That's a big feeling, and that's a hard one to quantify. Thanks, guys, so much. Michael McKee, international economics and policy correspondent at Bloomberg News. Dave Wilson, stocks editor at Bloomberg News on the remote access from New Jersey. He will be along later on with his stock and chart of the day. Hey, big headline, as expected, House clearing the $1.9 trillion stimulus bill for the president's signature. You're listening to Bloomberg. And all right, so obviously breaking news, as expected. We talked about that vote. The House already had the votes beforehand, and now specifically, though, it's official. The U.S. House of Representatives clearing that $1.9 trillion stimulus bill for the president's signature. That is expected to go on to the president, and at least based on our reporting, he is expected to sign it on Friday. Massive stimulus program. I think there were some questions as it was moving along, but for the most part, rather smooth sailing.
Yeah, rather smooth sailing. Let's go now to Laura Davison, Bloomberg News congressional correspondent. She joins us live from Washington with the latest. Laura, as Carol was saying, relatively smooth sailing to be expected. Any surprises here at the last minute?
You know, there really wasn't. Going into the House vote today, there was concern potentially that some progressive members would reject some of the changes that were made over on the Senate side to moderate the bill a little bit, lower the amount of unemployment payments, as well as earlier changes had lowered the caps on who gets the stimulus payments. Progressives decided to go forward, and Biden is set to sign this bill into law come Friday.
So how quickly do the checks go out? I think that's what most Americans want to know, right? $1,400 stimulus checks, they start arriving, is it this month?
Yes, this month is what Jen Psaki, the president's press secretary, has said. When the checks will be going out, I've been in touch with the IRS daily on this issue. They are prepared to start sending these out. They haven't set an exact timeline of when they'll go out, but if we look at the previous 2 rounds of stimulus checks, last March during the CARES Act, they got them out within about 2 weeks, and then in December, they've gotten a little bit better about this, a little bit faster, and they got them out just within a matter of a couple days. So we don't know the exact timeline yet, but you could look to that, looking at, somewhere from a couple days to 2 weeks to when you could start seeing that in your bank account.
Laura, just in the nick of time, right?
Just in the nick of time for April rent.
Why Fridays? Why is the president signing this on Friday? I mean, I know they want to do this ASAP. Why 2 days away?
So I don't know exactly the specifics here, but typically with legislation, there's kind of all of the paperwork that happens after the bill is signed. We saw this with the Tax Cuts and Jobs Act, also with the CARES Act. There's usually about a 24 to 36-hour period lag from when they get everything finalized, dot all the I's, cross all the T's, get the bill enrolled, which is sort of a ceremonial thing. They'll do that this afternoon, and then it can make its way over to the White House for a signature.
Hey, I wonder, Laura, because you watch the comings and goings, the yin and yang of Congress here. Is this a big political win for the president? Certainly feels that way, but he didn't necessarily get the bipartisan support that he might have hoped for.
Yes, he didn't get the bipartisan support, which is one thing that Biden particularly wanted. But for Democrats writ large, they got a lot of the policies that they wanted, which they wouldn't have necessarily gotten had they done this in a bipartisan manner. You look at some of the wins that they've been trying to do for a long time. There's some pension relief. There's this child tax credit. That's going to be huge for Democrats. It's sort of an anti-poverty program. They hope to make that permanent. So on the policy side, this is a win for Democrats. In terms of unity, not so much.
So what's next? How do they take the momentum, move forward, and continue to legislate, perhaps without much, if at all, Republican support?
They are already looking at the next bill. This will be an infrastructure plus jobs plus green energy plus, perhaps a tax bill as well. So there's lots of work happening in committees in Congress. They're already looking at how big this bill could be and really how to do it. There's really a division now about whether they try to do the reconciliation route, Democrats go it alone approach, or if they do a bipartisan bill. Lots of unanswered questions about, how they do this politically, and then what are all the big bag of policies that will get thrown into this bill going forward. That's the agenda for the coming weeks.
I don't know if you hear that, Laura, but it's a bunch of Americans around the country just a sigh of relief, because I know there are a lot of Americans out there struggling. Hey, Laura, thank you so much. Laura Davis, and Bloomberg News congressional reporter, joining us from the nation's capital. Let's go to World and National News.
Nancy Lyons in Washington, D.C. Hey, Nance.
Hey, Tim. As you've been mentioning, the House has just approved that massive stimulus bill, with Speaker Nancy Pelosi announcing the tally.
On this vote, the yeas are 220, the nays are 211. The motion is adopted.
It includes $1,400 checks, extends unemployment benefits, and provides more money to the hardest hit businesses. The bill's sponsor, House Budget Committee Chairman John Yarmuth, says the American Rescue Plan is good for the nation.
We promised relief, the president promised relief, and now help is on the way.
Republicans have argued the $1.9 trillion price tag is too much, and that the bill is filled with pet projects unrelated to COVID relief. The White House says the president will sign it on Friday. Well, as far as it's tackling the virus itself, President Biden is expected to announce this afternoon the U.S. has secured another 100 million new doses of the Johnson & Johnson COVID vaccine. He's meeting with top officials with J&J and Merck, who are producing the vaccines under a novel agreement between rivals. John Kerry, the president's special envoy for climate, is in Paris today and talks with other nations about targets that can be met when reducing carbon emissions around the world. Kerry says the U.S. is pledging to become carbon neutral by 2050, but says it will take full global cooperation to curb the effects of climate change.
We have to bring other nations to the table. China is a very large emitter, obviously. It emits about twice the amount that we do in the United States. We're the second largest emitter. And we acknowledge that it won't happen if we don't do it either.
The Biden administration is hosting a climate summit next month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's go to Charlie Pellet for a business flash.
All right, thank you very much. And here's what's going on. Best level of the day right now for the Dow Jones Industrial Average, up 500 points. That is a gain of 1.6%. Right to the numbers. We'll give you the why in a moment here. S&P up 33 right now. That's a gain of 0.9%. NASDAQ back on the plus side, up 27 points, higher by 0.3%. But the NASDAQ 100 index lower, little change, down now by less than 0.1%. 10-year yield 1.51%. Gold up 0.5%. 17.25 the ounce. And West Texas Intermediate crude up 0.8%. 64.52 a barrel. Equities are advancing for a second day as the rotation into value stocks resumes. S&P, by the way, on track for its best two-day rally.
Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. So much to talk about, but I got to say, Tim, I've been thinking about this a lot this week in particular, and how for many of us, we're coming up on kind of our 1-year mark in terms of dealing with COVID. For a lot of people, that's when they started, a year ago, working from home specifically. It's hard to get my, head around that. It's been a year.
I know it's a cliche. I remember it like yesterday. For me, it was March 11th. I was out to dinner with my mom. She was visiting from California. And my wife, who lives in New York with me, she was not visiting from California. We came back from dinner, Carol. This was the last time we ate dinner in a restaurant. We saw in the news that Tom Hanks had tested positive for the virus, and the NBA had canceled its season. That's when it hit me.
Yeah, for us, Friday the 13th was the last time we had a guest in studio 1 year ago. All right, so let's get an update on where we are, what he is seeing. So glad to have back with us Dr. Stephen Corwin. He's president and CEO of New York Presbyterian Hospital, who, as you might recall, I think last time he was on, we talked about what the New York Times has called him, the CEO at the center of New York's coronavirus crisis. That's what they said about a year ago. He joins us on the phone in New York City. Dr. Corwin, so nice to have you back here on Bloomberg Radio. How are you? We, I think, talked with you in last December, so about 3 months ago. How are you doing? What's changed since then?
Well, unfortunately for New York City, it seems to be anomalous compared to a lot of the declines we're seeing in the rest of the country. What we've seen was a secondary surge that started in that December time frame, and we still have a lot of COVID patients in the hospital and a lot of sick COVID patients in the hospital. So although we're at about 30 to 35% of where we were at that horrendous peak in the April time frame, we still have a lot of patients in the ICU. We're still living with the virus, and the positivity rate in New York City still is hovering in that 5% range. So it still doesn't really feel good in terms of what our emergency rooms and ICUs are seeing. So hopefully, with the vaccine, as we get more people vaccinated, the quicker we get people vaccinated, the less likely one of these variants will escape the vaccine, and we can get back to normal. But right now, we're seeing a plateau at a level that we're not really happy with, to be honest with you.
Yeah, that's some really disconcerting news. And my question is why? I mean, we did learn today that new virus variants account for 51% of New York City's COVID cases. That's what health officials said at a briefing on Wednesday. We know that these are more infectious than older strains of the virus. Is this why this is happening in New York?
I think so. I mean, all of this becomes speculative because we're not testing every single sample, but it looks like the British variant is the dominant variant. We've seen some South African variant with our own genetic testing when we do sampling. So I think that that's probably it. The more disturbing thing is that the percentage in the ICUs has gone up, and that means that, the number of people who are quite critically ill has gone up. So even with the South African variant, with the Johnson & Johnson vaccine, people did not end up in the hospital and did not end up in the ICU. So I think that's going to be the critical thing, making sure that people don't end up in the hospital, even if the positivity rate is high.
Dr. Corwin, are the demographics the same? Is it older people? Is it minorities in terms of the more severe cases or the majority of cases?
It's a somewhat younger skew.
Okay.
In part because I think that thank God, the nursing home patients and a lot of elderly patients have already gotten the vaccine, so that's good. And we're, I know that younger people are at lower risk, but we see a lot of young people in the ICUs. So everyone's got to be, particularly people, young people who have high body mass indexes or are obese or pre-diabetic and diabetic. So that's of concern. I heard your two anecdotes about what you recall. My recollection of that date was, on March 8th, believe it or not, March 8th of last year, we had 4 COVID cases in our entire health system, which has 3,600 beds. By March 15th, we had 66 patients. By March 22nd, we had 590 patients. And by March 23rd, we had 1,600 patients. So you recall that dramatic slope, and for those of us in New York, how absolutely horrific it is. But my recollection of that week was actually this very day, my chief operating officer, Dr. Laura Faris, called her contacts in the Archdiocese and said, you don't really plan to go ahead with the St. Patrick's Day parade, do you? Mm-hmm. And if you recall, that Friday before the St. Patrick's Day, they canceled it. We all sort of rolled into it thinking, let's hope for the best. And it was really horrific.
That's how we realized those things, when things started getting canceled, when we started seeing major sports getting canceled, that's how we knew specifically that things were, absolutely coming undone. It was hard to, you felt how heavy this all was and how real it was.
The weight of it.
Yeah,
right?
exactly.
The weight of it. Or walking outside with a mask on and saying, am I going to be safe if I go to the grocery store?
I mean, we weren't even wearing masks, though.
Right?
Yeah.
I remember going to D'Agostino's and picking up some staples. People not being able to get toilet paper or paper towels, and people now going to Fresh Direct as opposed to going to a grocery store. So I don't think we're going to get back to those days, and I don't mean to be a doom and gloom person, but I'd like to see it come down quicker than what it has. And I'm very concerned about people thinking, okay, masks off, restaurants full blare, let's go back to normal. I don't think you can go to 0 and 100 in a second.
Well, I hope everybody
I have a lot of respect for the I have a lot of respect for the CDC director, Dr. Walensky, and I think she's right. We got to be careful.
Hang on for a second, because those numbers you laid out, it just reminds us exponentially how quickly this can get out of control. We're going to come back to Dr. Stephen Corwin, President and CEO of New York Presbyterian Hospital. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so sarcasm alert. All is right with the world. We just got a tweet from Governor Phil Murphy saying he and New York Governor Cuomo announcing that New Jersey and New York City will both expand indoor dining capacity to 50%, 50, beginning March 19th. All's okay.
Well, it's a puzzling decision given what we heard from Dr. Stephen Corwin just a few minutes ago about capacity and how he's still seeing so many hospital beds full of COVID patients.
The plateauing of numbers, certainly here in New York. All right, we're going to continue our conversation with him in just a moment. Hey, Charlie Pellet, get us up to speed.
Indeed, we've got gains for the stock market right now, and the bulls got a big appetite for stocks with the Dow, the S&P, NASDAQ all rallying right to the numbers. We'll give you the why in a moment here. With the S&P up now by 32, that is a gain of 0.8%. The Dow up 514, best level of the day, up by 1.6%, and NASDAQ up by 14 points, a gain now of 0.1%. Technology shares underperforming. Look at the NASDAQ 100 index, down right now by 0.1%. GameStop briefly on the minus side now, down 1.6%. AMC, by the way, after the bell, lower now by 4%. 10-year yield 1.51%. Gold up 0.5%, 17.24 the ounce. West Texas Intermediate crude up 0.7, 64.43 now for West Texas Intermediate crude. S&P on track for its best two-day rally in 5 weeks. Equities are advancing for a second day as the rotation into value stocks resumes. Unofficial familiar with the plan says President Biden will double the American order of Johnson & Johnson's vaccine, bringing the country's supply to enough for 500 million people. Biden will be making the announcement today during an event with the chief executives of J&J and Merck, who struck a collaboration to boost production of the J&J vaccine. All of this as vaccinations continue to pick up, clearing the way for more economic activity. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
Right now, we're seeing the virus on the retreat, which is fantastic, but we have work to do. We have a lot of people to get vaccinated. We have to really push the virus so far down that when it tries to come back, maybe in the fall in a bigger way, we're really ready for it.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer up 1.8%, its German partner BioNTech up 1.7%, AstraZeneca up 1% right now, Moderna on the minus side down 0.5%, Johnson & Johnson up by 0.9%. Disney has announced a 7-year broadcast agreement with the NHL that brings games to ABC and ESPN, as well as its streaming platforms, ESPN Plus and Hulu. And after the bell today, we will be hearing from Oracle. Disney shares right now, DIS on the ticker. We've got Disney shares trading higher, up by 59 cents, 195.12. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. Tim and I just mentioned a tweet put out by New Jersey Governor Phil Murphy about how he and the New York Governor, Andrew Cuomo, just announcing that both New Jersey and New York City will both expand indoor dining capacity to 50%, beginning March 19th. And I had a little sarcasm in there about it feels like, all right, everything's okay. But as we know, and just heard from Dr. Stephen Corwin, President and CEO over at New York Presbyterian Hospital, the numbers still in the New York metro area are troubling. Dr. Corwin, when you hear announcements like that from the New Jersey governor, along with the New York governor, does it make you a little bit nervous here?
Yeah, absolutely. Look, I think that we've been through a horrific crisis in terms of the economy, and especially in terms of the restaurant industry and travel and leisure, et cetera. So I understand the need for some of these businesses to survive and for us to try to open the economy. Having said that, you're titrating the opening versus the number of infections. And we know that indoor dining is a big locus for infections. And so mask wearing and indoor dining, making sure you're wearing masks and being careful about indoor dining is really important. I can tell you, I still would not feel comfortable going out to a restaurant myself. I'm sure some people will. But I think we've got to be very, very cautious about how quickly we open this up. As Dr. Sharfstein has said, you got to push the virus down to very low levels so that when it reemerges, we can handle it. I think that's really important. I think that governors saying, let's rip off the masks and go back to 100% full business is a mistake. I think President Biden called it, that they were Neanderthals. I think that's an insult to Neanderthals, to be honest with you. I really feel strongly that we've got to be careful over these next couple of months. I know it's been a long time. I know everyone wants to see their children, their grandchildren get back to some sort of normality. But boy, if we can vaccinate everybody in the next few months, and I think the J&J vaccine and the production of it and Pfizer and Moderna coming, I think we'll be a lot better off. So I would just urge everybody to still be very cautious.
Hey, Dr. Corwin, what about people who've been vaccinated? I can definitely understand the feeling of somebody who's been vaccinated maybe for a few weeks. It's been a few weeks since they got their second dose. They could feel safe going out to dinner, right? And this could be for them.
Well, yeah, I think there are a couple of things. First, I think that it's easy, as the CDC has said, easy to congregate with people that have been vaccinated, and you can start to congregate people that are low risk. We still don't know whether you can get the virus and be asymptomatic or mildly symptomatic and infect other people. And you still want to get to the point of herd immunity. But sure, if you've been vaccinated, you're going to feel a whole hell of a lot more comfortable than before. But we really have to get the whole population vaccinated to be effective. But of course, you want to be in a situation where you're protecting others, protecting yourself. I wouldn't regard getting vaccinated as a passport to do whatever the hell you want to do.
Wow. What hope do you have that we get enough people vaccinated that we can see herd immunity? Just got about 40 seconds here. And how quickly?
I'm very hopeful.
You are? Okay.
I think the president has done a terrific job in accelerating what had happened under Operation Warp Speed. I thought Operation Warp Speed was terrific. And I think that with the Defense Production Act invocations, I think by middle of May to end of May, I think we could, if everyone gets vaccinated, I think we can be in really good shape.
We're going to end on that optimistic note. And I'm just going to tell you, you gave us the quote of the day about Neanderthals. That's going to stay with us. Dr. Corwin, stay well, be well, and thanks
you as well. Thanks so much.
You bet.
Be well.
Dr. Stephen Corwin, he's President and Chief Executive Officer at New York Presbyterian Hospital, on the phone in New York City. Nice optimism to end up. And what's good about a voice like that, it's very steady, it's even, and he's just telling us the numbers and what he's seeing, and it's hard not to be a little worried about still what's going on here in this area.
The data don't lie.
No, exactly.
A 5% positivity rate is nothing to be proud of. And like he said, New York City, something's happening here that's not happening in other areas.
Yeah, right. And just like when you and I heard it, just put us a little bit on edge. All right, let's get to world and national news. With that, once again, here's Nancy Lyons in D.C. Hi, Nance.
Hey, Carol, the American Rescue Plan has been approved by the House, giving President Biden and Democrats a major legislative victory. House Speaker Nancy Pelosi says the bill that provides an extension of jobless benefits, money for vaccines, and those $1,400 checks is just what the country needs.
This legislation is one of the most transformative and historic bills any of us will ever have the opportunity to support.
Not one Republican voted for the bill in either chamber, saying the $1.9 trillion price tag was too steep a price to pay. President Biden is expected to sign it into law on Friday. Well, the president is meeting this afternoon with the chief executives of drug makers Johnson & Johnson and Merck, which have agreed to produce the J&J single-dose vaccine together. Bloomberg's Irv Chapman has more.
The number of COVID-19 deaths has dropped below 1,000 per day as vaccinations hit the 3 million a day mark. White House coordinator Andy Slavitt commented on the latest step to produce more vaccine.
We led a historic partnership between two rival drug companies to procure an additional 100 million doses of the Johnson & Johnson vaccine to scale manufacturing and speed delivery. It gives us maximum flexibility for our upcoming needs.
Dr. Anthony Fauci added that ongoing studies are likely to allow the vaccination of high school students in the fall. In Washington, Irv Chapman, Bloomberg Radio.
President Biden has gained another cabinet member. The Senate has confirmed Marcia Fudge to head the Department of Housing and Urban Development. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you, Nancy Lyons. So one thing that we want to talk about on Quick Take today is this idea that Governor Cuomo is facing a lot of different challenges, right? He's got the pandemic to get through, and he's also facing more people, more women who've come out and said that they have been harassed by him. The latest one yesterday, unnamed, but a sixth person, that's according to a newspaper in Albany. I wanted to catch up with Ron Kim. He's an assemblyman from Queens.
You've talked with him before, right?
Yeah, we've talked to him before. We talked to him last week, and he's been a critic of Cuomo from early on. He is a fellow Democrat, but he's a progressive Democrat, and he continues to call for the ouster of the governor. Here's a little bit from our conversation.
I believe he is a distraction every day. That's why more and more lawmakers are coming out, including the longest-serving member of the Assembly, Dick Goffrey, chair of the Health Committee, just came out yesterday calling for his resignation so we can get back to the people's business.
He said that this has been a distraction from the people's business. It's been a distraction to governing, and he wants to move beyond it. Look, that's the question.
Yeah. And I'm not taking away from the accusations. I think a lot of people would argue that, listen, there are charges and they need to be, looked at thoroughly and to find out the truth.
Right, and that's why, and there is an investigation ongoing. But some critics say that the allegations are enough. Other critics say, yes, the allegations are serious, but I want to wait until there is a result from this investigation. There is a report.
Is there growing political, for his ouster, for Governor Cuomo's?
Yeah, there is. Yeah. But the question is does it have any, it's growing, but the question is, does it have any real legs? I mean, the governor has said he's not going to resign.
Yeah. Yeah, no, he's been, right, several times.
He's been adamant about that.
Yeah, exactly. I think it's an important conversation. I think it's, you and I, we kid, but here we are. It's just March, and there's been so many stories, market stories, health stories, and political stories, and this is certainly another one of them. More of that interview, though, from Quick Take at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Merrick Garland has won Senate confirmation to be U.S. Attorney General. Again, repeating, Garland wins Senate confirmation to be Attorney General. Stocks pushing higher at or near session highs right now, at least for the Dow Jones Industrial Average. We've got the Dow advancing 511 points, up 1.6%. Equities are advancing for a second day as the rotation into value stocks resumes. Treasury yields turn lower after a 10-year note auction. 10-year yield right now, 1.51%. The S&P's up 35 points, a gain of 0.9%. NASDAQ has been swinging between gains and losses, up now by 45 points, higher by 0.4%. The NASDAQ 100 index back on the plus side now, up by 0.1%, and a 2% gain right now for the Russell 2000 index. Gold up 0.5%, $17.24 the ounce. West Texas Intermediate crude up 0.8%, $64.50 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with today's installment is Bloomberg's Renita Young.
On this day in women's history in 2015, Los Angeles celebrates Susan Cuddy Day. She's the first Asian American woman to join the U.S. Navy and its first female gunnery officer. Cuddy rose to the rank of lieutenant. She later worked for U.S. Naval Intelligence, the Library of Congress, and the National Security Agency. Cuddy is also the daughter of the first married Korean couple to immigrate to the U.S. She served during World War II. During the first celebration of Susan Cuddy Day, she was 100 years old. She said when the war came, she was motivated to fight for freedom, and it didn't matter whether she was Asian or not. During her service, Cuddy had to endure segregation and racism and had to marry her Irish-American husband on a naval base because interracial marriages were against the law at the time in Virginia. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So this week, we've been talking about it, Bloomberg Business Week featuring a deep dive into equality, the cover story of the issue about the individual who spent her career as a law professor documenting racism in a tax system that's supposedly colorblind. We're talking about the U.S. tax system.
Yeah, we are. Joel Weber is editor of Bloomberg Business Week, joining us on the Access line from Brooklyn. And Ben Steverman, he's the person who wrote the story, a personal finance editor at Bloomberg News. Joel, I mean, I don't even know where to start because this issue is just so important. Talk a little bit about the equality issue.
So we have relaunched a vertical at Bloomberg called Equality that will be sort of the home for our ongoing coverage. And we wanted to help make a splash at Business Week as we launched that initiative and that project. And so we really kind of like pulled together across the global newsroom to try and bring as many of these stories to life as we could. And there were a couple in particular that stood out to me that were a little bit more U.S.-centric that, funny enough, both had to do with taxes. And yesterday we heard about Jason Grotto's story on property tax and how it's effectively like a regressive tax. And there was another thing that caught our attention, which was Ben Steverman saying, hey, by the way, do you guys know about Dorothy Brown, who's got a book coming out? And I said, I have never heard of Dorothy Brown. Tell me more. And with that, I'll segue over to Ben. This is a professor, a legal tax expert, a law professor at Emory. And she spent decades basically examining the U.S. tax code. And Ben, that's where it gets provocative. What has she found?
Yeah, so she's an interesting person. Even before she became an eminent professor of tax law, she grew up in the Bronx. She worked at Drexel Burnham Lambert back in the 80s. She's had a long career, but since the 90s, she's been looking at different parts of the tax code and saying, and really analyzing what is the impact this has on wealth. especially on the wealth of black people and the wealth of white people. And what the heart of the question is, we've had a racial wealth gap between black and white in this country that really hasn't narrowed at all. So you see many more black people going to college, incomes going up, but the wealth of black folks is not keeping pace with, it is keeping pace, but it's still way behind the wealth of white families. And so what she's concluded is that the tax code has a big part in that, especially the U.S. income tax. And a lot of these carve-outs in the income tax for retirement and home ownership and all sorts of other things that have been built into this supposedly progressive system that really end up in a situation where a black person and a white person with similar incomes, the black person can end up paying significantly more.
How did she get there to this point? Because initially, I think her thinking, according to your story, is that, tax code is going to be colorblind.
Yeah, I mean, that was her assumption when she decided to get into tax. She wanted to escape the whole issue of racism. Her original plan was to be follow in the footsteps of Thurgood Marshall and then be a civil rights lawyer. And she said, I don't want to deal with that in my professional life. I just want to focus on this what seems like this colorblind system of all these intricate rules. The tax code doesn't even mention race, really. But she was part of a movement of people back in the 90s who really started to say, hey, there's these other areas of the law. They were written. All these laws were written by white people, generations of white people, and is there some hidden racism there? And what she's really showing in her book is that generations of lawmakers have built this system that's really optimized for white wealth, for white people that are already wealthy, and can end up magnifying the financial toll of things like labor market discrimination, racist criminal justice system, housing market discrimination, especially because there's so many tax incentives in the tax code for home ownership, but black people do not benefit from that because of the racist housing market. The fact that white people don't want to live in racially diverse neighborhoods really hurts the values of homes owned by black people.
Ben, you mentioned her book in there, which I think we failed to set up at all, and worth mentioning that this is a forthcoming book, and one that you've read. Title is The Whiteness of Wealth. I think it's going to make a pretty big splash, and even the cover, I think, it may not rival the magazine's cover this week and our portrait of her, which is, I think, amazing, but I think it's a really provocative book, and you've read it, and one of the most interesting things that I think you hit on in your story is, the history of the income tax actually in the U.S. And it wasn't always this way. I thought that was one of the most interesting takeaways from this. When the income tax was introduced in 1913, it looks a lot different then than it does now. What happened?
Yeah, I mean, when you go back to the very beginning, it was a much simpler system where, and it was really focused on getting wealthy people to pay taxes. And there was no joint filing, so married couples didn't get, right now, if you're a married couple and you have one high earner, you get basically a tax break. And one of Brown's points is that the introduction of joint filing created this penalty for when you have two married couples who are both working and have similar incomes. That can really means they're paying a lot more, even though they're often working in much lower status jobs than the comparable white professional whose spouse is staying home. So as sort of things have gone on, they introduced the 401k and health insurance became a much bigger part of the market, and health insurance is hugely subsidized for disproportionately white people. As those things were introduced over time, she's saying there's been this huge carve out for white families.
Well, I've got to say, it's a must read. It's a deep dive. There's so much in this story. And I do want to point out that Dorothy Brown, she's going to join us in a couple of weeks on Bloomberg Business Week on Bloomberg Radio. So we're looking forward to that. Thanks to you guys for hooking us up. Ben Steverman, cover story of the magazine, personal finance editor at Bloomberg. Joel Weber, editor at Bloomberg Business Week. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, March 10th. We have got the Dow, the S&P, NASDAQ all advancing right now. Stocks at or near session highs, right to the numbers. S&P up 37 right now. That is a gain of 1%. The Dow's up 524, up by 1.6%. NASDAQ up 58 for the NASDAQ Composite Index, a gain of 0.5%. After earlier losses, the NASDAQ 100 Index now up by 0.2%. Russell 2000 surging today by 2%. Equities are advancing for a second day as the rotation into value stocks resumes. S&P on track for its best two-day rally in 5 weeks, led by financial firms and producers of raw materials. 10-year yield 1.51%. Gold is up 0.5%, $17.24 the ounce, and West Texas Intermediate crude up now by 0.7%, $64.48 for a barrel of West Texas Intermediate crude. Rising mortgage rates are cutting into loan refinancing, and with that story, here's Bloomberg's Vinny Del Giudice.
Industry data suggests higher mortgage rates are leaving millions of homeowners less opportunity to trim monthly payments. The Mortgage Bankers Association reports its loan refinancing index is down 23% over the past 6 weeks and running at the lowest level since October. The rate on a 30-year fixed mortgage fell to a half-century low of 2.65% in early January, and today it's averaging about 3%. Vinny Del Giudice, Bloomberg Radio.
GameStop shares are trading higher now. Volatile session. Numerous trading stops for GameStop, but right now it is up now by 3.8%. AMC Entertainment will be reporting after the closing bell, down now by 3%. Toll raising the dividend, up by 5.6%. Recapping stocks rally, S&P up now by 1%, up 37 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we were all over this story yesterday when it broke. It was about the hacker group that says it wanted to show how much surveillance is out there in our world and how easy it was to breach it. Great reporting, and it was a Bloomberg exclusive.
It was. William Turton is the one who brought it to all of us and to all of you. He's cybersecurity reporter at Bloomberg News, joining us on the phone from New York City. William, I'm still reeling from reading this story because it's terrifying in so many different ways. What did this group of hackers do?
Hey, y'all. Thanks for having me. So they owned, as hackers say, they hacked this company in the worst possible way. They got into an account at this security camera company called Verkada that allowed them to look through the cameras of all of its customers. And not only that, they could look at the cameras live. And they could also look at the archives of the videos that those customers had stored from those cameras. And in some cases, those cameras were using facial recognition technology, which the hackers could also interact with.
How was that so easy?
Well, it's obviously there's multiple investigations going on at the company right now to answer that question. But, they got in through exposed credentials. So, a username and password for a so-called super admin account had been left out there publicly on the internet. It's sloppy. It's bad security practice, and that's how it happened.
What do we know about the group that did this? Who is Tilly Cotman?
Well, Tilly Cotman is a 21-year-old Swiss citizen who kind of hacks with an anti-capitalist, anti-surveillance
21
worldview. They seek to kind of shine a light on what they see as abuse of technology and then capitalism gone too far.
And I mean, that's what this is about, right? Shedding a light to say, hey, folks, I don't know if you're aware of it. You've all gotten so used to having cameras all around you, like we all have a camera on our phone. But did you realize what that really means?
Right. And another aspect of this that really isn't being discussed much is like these hackers could have done something much worse. they could have sat in the system for a long time and looked at all this confidential video. They could have, utilized these cameras to launch other hacks in the future. They could have tried to hack the networks of Verkada's customers, but they didn't do that. They came to a journalist and they blew the whistle.
So Verkada, the company at the center of this, it's a startup that was founded back in 2016. It sells security cameras that customers can access through the web, obviously. They've raised $80 million as of January 2020. It values the company at $1.6 billion. What does this mean for the company? And what have you heard from the company since you published this?
Well, obviously, it's terrible for the company's reputation, right? To have so many high-profile customers, not only high-profile customers like Tesla and Cloudflare, right, be exposed in this, but also schools, hospitals, jails. It's terrible for their reputation. And they're a company that tries to sell their security as one of their features. And what I'm hearing from the company is not much. They're doing an investigation, and they've contacted law enforcement, but we haven't heard too much more. They've restricted, the hackers no longer have access. They restricted the hackers from having access.
What's interesting, William, too, is I think about what we have seen in terms of cybersecurity just in the last few months. China's global attack on Microsoft's popular email software, right? That was last week. Then, of course, the 3 months ago when we had, the Russian attack in terms of cybersecurity, and that, we're talking about the private sector, we're talking about public sector. Increasingly we are seeing how easy, I guess it is, or how, this is kind of our world. And I'm trying to figure out, is it just that Tom Siebel, I talked to Tom Siebel yesterday, founder of Siebel Systems, C3 AI, it's showing how unprepared we are in this world and how easy it is really for people to breach systems in different ways.
Right. Well, You make a good point. It kind of feels like, me and my colleagues on the cybersecurity team here, we're not getting a lot of sleep lately.
You're busy.
Because,
yeah.
Right, because these hacks keep coming, and the kind of scale of these hacks are becoming increasingly large, and they're happening faster. The hacks of SolarWinds and the Microsoft Exchange servers were done, by state-backed intelligence operatives, most likely in Russia and China. I mean, this is obviously a different breed, right? It's kind of a smaller scale, but the impact is comparable in just kind of how jaw-dropping it is. So many of these systems that we rely on are just totally insecure, and the companies that sell them and build them aren't really that interested in securing them.
Why is that though? Like, wouldn't they want to make security a selling point?
Well, it's kind of like, you're getting away with it for a long time and you're not getting caught, right? Like, cybersecurity is hard and it's expensive. And you're a startup, you want your margins to be good so you can keep raising money. You want to sell, you want the numbers to go up and to the left, or up and to the right rather. But if you're stopping to kind of build security and bake it into your products, it's expensive and it slows down your development. But, taking that approach can end in disaster like this.
Do you feel like, William, since this is your world, you and your team, that this kind of a story, along with the other two stories that we've had so far in terms of cybersecurity breaches, that it's a wake-up call, that like corporate America, governments are like, okay, wait a minute. We just got off a health pandemic, that there were lots of cues for years that this was coming. Are we now realizing that we got to get ready and prepare ourselves against kind of the mega cyber attack that's likely going to come in just got about 30 seconds?
Well, unfortunately, we've had many, many wake-up calls before, right? This isn't the first time we'd have a wake-up call. I think what we've seen from the Biden administration is they've signaled that they're going to try and take cybersecurity more seriously, but, it's an extremely complex problem and no one has a really great answer for it.
All right, well, get ready to be even busier. I'm just warning you.
I guess I'll be back here.
And William says he doesn't sleep at night, but what he writes makes me not sleep at night.
That's so well said. William Turton, really good story. Cybersecurity reporter at Bloomberg News on the phone from New York City. It is definitely the world we're living in.
It is. Cameras everywhere. And who can access them? That's the question.
Oh, man. All right, let's get to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey there, Carol. The House has passed the American Rescue Plan, sending it to President Biden for his signature. Congressman Hakeem Jeffries took a shot at Republicans who argued that the $1.9 trillion price tag was too high.
So much pain, suffering, and death and our Republican colleagues want us to do nothing? What is wrong with you? We are going to act with the fierce urgency of now. We will crush the virus. We will provide direct relief to everyday Americans who are struggling.
House Minority Leader Kevin McCarthy voted against it.
It represents a missed opportunity for Congress to focus on the real needs of the American people.
The bill will send direct payments of $1,400 to many Americans. It extends the $300 a week unemployment benefit until early September and provides funding for state and local governments to open schools. It also has money for coronavirus testing, contact tracing, and vaccine distribution. The Senate today has been busy as well, confirming some of President Biden's cabinet nominees, including Merrick Garland to be Attorney General. He was confirmed by a vote of 70-30. Senate Majority Leader Chuck Schumer says he's an excellent choice.
America can breathe a sigh of relief that we're finally going to have someone like Merrick Garland leading the Justice Department, someone with integrity, independence, respect for the rule of law, and credibility on both sides of the aisle.
Also confirmed today, Marcia Fudge as Housing Secretary. She becomes the first black woman to lead the agency in more than 40 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's go to Charlie Pellet for a business flash.
Hi, thank you very much, Nancy. Here's what's going on. S&P on track for its best two-day rally in 5 weeks, led by financial firms and producers of raw materials. Equities up for a second day as the rotation into value stocks resumes. Treasury yields turn lower after a 10-year note auction. Let's begin with the 10-year. The yield there, 1.51%. 10-year up 2/30 seconds. S&P up 33 now, up by about 0.8%. The Dow holding near session highs, up 505. That is a gain of 1.6%. And NASDAQ up 43, higher by 0.3%. NASDAQ 100 index up by 0.1%. Russell 2000 up 1.9%. Dow Transports up by 0.8%. Gold up 0.5%. 17.24 the ounce. West Texas Intermediate crude up 0.8%. 64.52 a barrel. Lots of earnings after the closing bell today. Among some of the names we'll be hearing from: Oracle lower now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much for the update. So, we talked yesterday about Disney's streaming service, Disney Plus, topping 100 million subscribers since launching just 16 months ago. That was fast.
It's an incredible feat for a company that many analysts said was a little late to the streaming game, following Netflix doing this for years, really around the world.
So all you naysayers, check that out. Because a little perspective, Netflix, which is the pioneer when it comes to streaming, they finished 2020 with almost 204 million subscribers globally, but they've been building that in the last 14 years. So it's taken a while. Let's get some perspective on this, because our Bloomberg Opinion columnist Tara LaChapelle, who covers the business of entertainment and telecom and deals, she's with us right now on the phone in New Jersey. And you remind us, Tara, that Netflix may actually be missing out on some of the money that Disney is raking in. First of all, when you saw that number from Disney Plus, what did you think?
Well, Disney's growth has been so impressive, but it has to do with the power of its brand globally, and this idea, which I wrote about today, that Netflix is a moment, Disney is a lifetime. That their brands resonate for generations, and they have all these products that come out after the films, and it just kind of stokes this continued excitement around Disney's brands.
Gotta say, that just sounded like a Disney commercial. I'm not going to point fingers there, Tara, but that was so. Netflix is a moment, but Disney is a lifetime. Is that what you said? Or forever?
So we already forgot those. So
sorry.
So it's not.
No, it's good. It's good though. I promise you.
So Tara, I think back to when Disney was talking about this a few years ago, and not all the analysts, but some very prominent analysts came out and said, "Hey, Disney, you are pretty late to the streaming game." Why do you think that Disney Plus's rise has caught so many off guard? And it's not all the pandemic. The growth was pretty quick in the few months before the pandemic began, right?
Yeah, I think that if anything, the pandemic made it harder for a lot of these companies, because you want to launch this new app, you want to have a lot of content on it, and of course Hollywood studios, their productions got shut down for a really long time. Some of them are still struggling to get back up and running, and so it kind of caught these apps off guard, where
you didn't really have a lot of new stuff to watch. Thankfully, Disney Plus had The Mandalorian, but Netflix has had a whole heap of stuff, and they're still releasing a new movie every week this year. So it made it hard to compete with that, and Disney really shined through as the only company that could do it. And again, I think it's just people know, they expect quality when Disney's name is on it. They know if it's Star Wars, if it's Marvel, if it's Pixar, it's going to be quality. Parents know that it's going to be family friendly, that they can count on that and not have to worry what their kids are coming across while they're on an iPad and the parent is working from home and distracted. So I think that brand power really shined through last year.
Netflix sells a moment, Disney sells a lifetime. It's in the headline. Sorry, Tara. But I do love it. But listen, anybody who's, been covering Disney, I've spent some time with them over the years. And I mean, when it comes to synergies and having a brand and taking something and running with it, and it's on the big screen, it's a ride in one of the theme parks, it's merchandise, it's Halloween costumes, it's games. I mean, they get it, how to reach out to the consumer on multiple levels.
Yeah, I mean, that virtuous cycle is what Netflix is really missing. And so I was kind of arguing in my column this week that Netflix can do that. They can do the merchandise licensing that Disney does, albeit maybe on a smaller level. The reason that they really haven't is because they don't have any franchises that they could build around. Stranger Things is probably the closest that Netflix got to that. And even that, I don't think was quite there. That wasn't a Marvel. That wasn't Star Wars. So I think Netflix, if they can do some fine-tuning to their content strategy and really come up with a franchise, a series that has legs that they can carry on for years and years, like HBO's Game of Thrones is what I compared it to. If they can build something like that, you can build a really profitable merchandise licensing business, selling consumer products that are pretty high margin because you're not manufacturing them, you're just slapping your logo on it. And I think that's an opportunity for Netflix as it starts to run out of growth avenues.
Can I just say Starz, Outlander, man, they've just slapped it on everything. And it's been, a whole other merchandise line.
I think Game of Thrones, too. And look, I think, Terry,
all right, that's a big one.
You make a really good point about the chess sets and the boom in chess sets following the Queen's Gambit, which was a show that was just massively popular for the streaming platform. So what does this look like? Because Netflix has been relatively pure when it comes to the type of content that it does. And I mean pure in the sense of we're not doing live sports, right? We tried the talk show thing. It didn't really work. We're not doing ads. So how does Netflix do this in a way that's Netflixy?
Yeah, I mean, it's difficult, right? Because they haven't really shown how they can. I think, some of it is just emulating what companies like Disney and HBO have done, which is taking the time to invest in a series that you can carry on for a long time. And Netflix is kind of notorious for having mini-series and canceling things just as they're getting going. And it keeps the app pretty fresh, and it keeps them, cycling through lots of content to please subscribers who are just binging endlessly. But at the same time, I think subscribers would like to have a franchise they can really stick with, like Stranger Things, like Cobra Kai. I think the Cobra Kai is kind of becoming that, but they need something bigger. And, I think it would make sense for them. And like you point out, they're resisting advertising. Right now, other companies are making money off of Netflix's content regularly. Facebook and Instagram, when, Tiger King or something goes viral on their service, that's boosting their ad business. And Netflix is saying no to ads. So if they're going to continue to do that and not take a piece of the ad pie, why not take a piece of the consumer product pie?
Well, and it's interesting, too, if you think about the cost of content, right? We constantly are talking about it. It's not inexpensive, and that's going to be what's going to keep, watchers and users of the service, on the service and willing to pay for those monthly fees. It is a way, if you can tap into the consumer market, and to some extent, Tara, a way to offset those costs.
Yeah, I mean, make some more money off of these programs. Queen's Gambit, it was a mini-series that if you added up the minutes for all the 7 episodes, it's 6.5 hours. And it was over in 6.5 hours, and they spent an awful lot of money making such a great story. So I think that if they could have, carried that on a little longer, had some sort of themed chessboards that they sold in tandem with this, that really would have helped pay for the cost of these big programs that are just awfully expensive to make, as you said.
And I have to say, I think there was also, from a woman's perspective, there was a fashion tie-in, there was a makeup tie-in, because I actually there's someone a company that I buy from, and they had a model in the vein of the actress and how she looked on screen, and they were definitely tapping into it.
Absolutely. I mean, that's the thing. You have all these companies really capitalizing on Netflix the virality of their content, and Netflix isn't. So, how can they take some of that money for themselves? And I think that's what investors are hoping to see, what they would call monetization of this content beyond just how many subscribers can you get to sign up.
I'm thinking Ozark-themed hotel for Netflix. What do you think?
That is wild.
No, that's one I think we'd pass on. I'm just still, this is such a good point, Tara, because Disney is the company that has created so many powerful franchises, and they've done it not just, from the ground up, but also through acquisitions. And Netflix just doesn't have that. Is there any indication that the company is thinking about those longer-term franchises? I mean, what, in your opinion, have been the big successes apart from Stranger Things, which, by the way, I could not make it any episodes into season 3.
I couldn't either, and it's funny because
it just died that season for me.
Yeah, and they have a lot of fans on Stranger Things, but again, it's not as big as when you think of like Game of Thrones or as enduring of a brand. And so, it's hard to name other examples. I think Cobra Kai was the first one that I saw where I was like, okay, I can't wait.
But that was a YouTube. That was a YouTube originally, right? That was a YouTube premium show.
Right, and that's the other trick with, if Netflix is going to go into merchandise licensing, it needs to be around shows that they own wholly. And so, they don't, for a long time, they were, just airing other people's material. So they need to have their own programs that they can really build out in order to do this.
So can you explain that a little bit? Because I think there's a little bit of confusion around to what extent Netflix actually owns its quote-unquote original content. I know it's changed in recent years, but even with something like House of Cards, which was known to be, it's among the first original pieces of programming, Netflix didn't actually have all the rights to that one. So what does Netflix need to do in order to control this from the beginning all the way to merchandising?
Right. I mean, they're starting to do that with some of their newer originals, as they call them. But, if you think back to some of the more popular stuff that was on their app, like I'm thinking of 13 Reasons Why was a really, interesting, phenomenal show that drew a lot of controversy and discussion. And it was labeled Netflix because it was on Netflix, but really Paramount TV Studios made that, which is why I think Netflix needs to be looking over its shoulder at competitors, because as much as people kind of dismiss the new Paramount Plus app, Paramount TV Studio makes an awful lot of great shows. They made Jack Ryan for Amazon Prime. So now that those studios are starting to prioritize their own streaming apps and not sell as much stuff to Netflix, what is that going to mean for Netflix's pipeline?
Hey, one thing I want to ask you, there was, I think, a conversation you had on the Bloomberg Opinion podcast about specifically going back to Disney, about their streaming service and how it's been kind of carrying Disney stock for a while. Do you think it ultimately can become the financial backbone for Disney?
I don't know, because it's hard to replace the legacy money that the media networks generate from advertising, from affiliate fees, and the box office. And so, I don't know if Disney Plus on its own can do that, but what I do see happening is over time, Disney and some of the bigger companies continuing this acquisition spree, and then these smaller ones going away where you have a less fragmented streaming environment, and there's fewer companies controlling all these services, and maybe that's the way to start making more money. I also think that, if we believe that these apps are going to remain commercial free, we are really fooling ourselves. I mean, they're not going to be able to resist the money that comes from advertisers, and advertisers are really after this space. So it's possible, but you can't see it yet because Disney Plus isn't making money yet. Right. But maybe, years down the road, as this industry changes, it starts to become more of a real, financial driver for them.
Yeah, just a little note to self. It's still not making money, just saying. Good stuff. Tara, thank you so much. Bloomberg Opinion columnist Tara LaChapelle. She covers the business of entertainment, telecommunications, and deals for us here at Bloomberg. All right, you are listening to Bloomberg Business Week. Quick check on the markets, and we are just off our highs of both the S&P and the Dow. Still good for a gain of about 0.8%, up 32 points on the S&P 500. Dow Jones Industrial Average, really the outperformer here, Tim, up almost 1.7%, up 524 points. NASDAQ, a bit of a different story, definitely off its highs of the day, but still eking out a little bit of a gain, up 31 points.
Yeah, taking a deeper look in Bloomberg Industry Group's energy is the best performer in the S&P 500, higher by more than 2.4%. Materials higher by 2%. Right now, information technology, the only laggard, down by just about 0.1%.
Yeah, so it's been, fairly broad-based in terms of the trade today. If I take a quick look at the Treasury Trade, 10-year note with a yield of 1.52. We did have some auctions today. 5-year note with a yield of 0.79, and the 2-year note with a yield of 0.15. So this seeing the Treasury Trade on a day when U.S. core CPI rising less than estimate. Keep in mind it's backward-looking data, so a little bit old, but just watching that rate curve as well. All right, coming up, folks, we've got about a half an hour left in the trading day. We'll get to the chart of the day and also take you down to the closing bell on this Wednesday. I'm Carol Massar along with Tim Stanovic. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So just going to say, Dave Wilson, in his chart of the day, asked the question, are you looking for a big top? I'm thinking he's talking circuses.
What do you think he's talking when it comes to the song?
Circus music.
We'll
Juggling, something like that. Clowns. All right, we're going to find out in just a moment. Let's get back to your top business stories. Here's once again Charlie.
Hi, thank you very much. And here's what's going on. We have got 28 minutes to go ahead of the closing bell. Stocks rise. S&P up for a second day as the rotation into value stocks resumes. In fact, the S&P on track for its best two-day rally in 5 weeks, led by financial firms and producers of raw materials. Treasury yields turn lower after a 10-year note auction. 10-year yield right now 1.51%. Nasdaq's up 10, higher by 0.1%. The Nasdaq 100 index lower by 0.1%. The S&P 500 index up 28, up by 0.7%. The Dow up 488, up by 1.5%. Gold up now by 0.5%, $17.25 the ounce. And West Texas Intermediate crude oil up 1.1%, $64.27 a barrel. President Biden will double the U.S. order of Johnson & Johnson's one-shot vaccine, seeking another 100 million doses, bringing the country's total vaccine supply to enough for 500 million people. Biden expected to make that announcement shortly during an event with CEOs of J&J and Merck, who struck a collaboration to boost production of the J&J vaccine. All of this as spring break begins for college students, raising concerns about young people congregating and getting COVID. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
Well, young people tend to think of themselves as immortal, so it's a very hard messaging challenge. I think that people dream about winning the lottery. In this case, young people have to be worried about losing the lottery. You know, even though everything might say on average they're not likely to get very sick, they could actually get sick. There are people who get quite sick who are young, and they could wind up with this long haul syndrome.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names today, Pfizer up 1.5%, BioNTech up by 2%, AstraZeneca up 1.2%, Moderna is down by 0.5%, Johnson & Johnson up by 1.1%. After the bell, we'll be hearing from Oracle. Shares lower now by 0.4%. Also reporting after the bell, AMC Entertainment Holdings shares down now by 5.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
A lot of popular songs.
They did, and they covered a lot of songs, too. That was originally done by an English musician, Leo Sayer.
Oh, my
In
God.
1973. It was a hit in the U.K., not in the U.S. Three Dog Night covers it the next year, goes to number 4 in the U.S.
You make me feel like dancing, right? That Leo Sayer, right?
Leo Sayer, absolutely.
But he was a lot higher, I think, when he did it, kind of-ish. He had a great voice. Cool. That was so embarrassing. I do that on radio. So, chart of the day, what do you got?
Well, you know, I mean, it seemed like we got to talk about the circus because when I see a reference to the big top in a report, I mean, it's the first thing I think of. But that's not really what Stephen Sutmeyer was writing about. He's a chief equity technical strategist at Bank of America. And he was writing instead about whether stocks had topped out here in the U.S. with what we saw in the past week or so, the pullback before we got yesterday's rally. And Sutmeyer figured, no, this isn't really a big top. This is more an issue of rotation. Investors selling some of the best performing stocks and putting money into shares that haven't done so well. And the reason he drew that conclusion, at least in part, was looking at, stocks listed on the New York Stock Exchange that were at 52-week highs. You can track the percentage of those shares. And, on Monday, we saw a reading of 21%, and that was the highest since December 2016. You go back just a few short months to September, it was only 0.1%. I mean, different times when stocks were coming off their highs, for sure, in early September. And, you've seen a real reversal, and the chart goes all the way back to 2009. You see, it doesn't happen all that often when you get such a high percentage of NYSE-listed shares surpassing their peaks over the previous 52 weeks. I'm sure in some cases you're talking about all-time highs. Put it all together, though, and he sees it as a plus for stocks, that things are kind of broadening out. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, so Dave, take us into the logic of only including NYSE listed stocks on this and not going to NASDAQ. And obviously, it removes some biotech and some technology, but why just focus on NYSE for this?
Well, the NYSE listed shares, I mean, it's a fairly broad group of stocks. It's a historical indicator. And, it's something that you're trying to get a sense of the broad market. This is one way to do it. Now, you can argue, without having NASDAQ in there, that, does it tell you the whole story?
Right.
Well, I mean, this is one of several indicators that he mentioned. So, it's just one that I chose to focus on because you don't see a lot of reference to, NYSE listed shares as a group. And there is an NYSE composite index, just like there's a NASDAQ composite. So, this one seemed kind of telling as well as interesting.
Right, but just another sign of market rotation, right? This is just some conviction there, and we'll see if it, continues in terms of the shift in where investors are focusing on.
Absolutely. The way that Sutmeyer put it, market rotation is alive and well, and that's certainly shown in this particular indicator, as with others that we talk about.
It is so interesting that back to the idea of keeping the NASDAQ out of this. If we think about the broader markets in the S&P 500, one conversation that has emerged over the last few years, has really been the power of some of the big NYSE listed companies in the S&P 500. So by leaving those out, you're definitely not seeing the full picture.
Well, I mean, you're not necessarily trying to get the full picture with every indicator. It's a matter of putting things together and seeing how they stack up. You can argue that you might get a different look if you threw in a couple of others. But just, going back to his report as a point of reference, I mean, it was talking about S&P 500 stocks above 10-day moving averages, talking about the Russell 2000 and the NASDAQ 100. So, he's looking at a number of other indicators, as most chart watchers will do, to try and get a broad picture of the market. It's just that, looking at this one, particularly telling with the kind of reversal that we've seen in the last 6 months ago or so of stocks, getting to those 52-week highs.
Listen, I think it's so important, right, Dave, as we try to figure out kind of what's next. Here we have a massive stimulus package that's going to hit our country specifically. We'll get the president signing that off on Friday. And I do wonder how that will translate into moves on Wall Street, what it means for the overall economy, and do we continue to see that rotation into some of the stocks that were left behind, hit so hard by the pandemic? Do investors continue to push them higher, or do also those other momentum players kind of join the move higher potentially because the economy's getting better?
Right. I mean, all kind of valid points. The argument against the bull market we saw from 2009 until last year, at least for many people, is that it was relatively narrow. It was, say, the big tech stocks and not necessarily a whole lot else leading the way. So what you're seeing in the past few months is sort of a different look because, it's the smaller companies, it's the cheaper shares, the value stocks that have kind of emerged to some extent. And it's reflected in this particular indicator as well as others. So, that becomes the issue down the line, as you mentioned, as things kind of, shift to the extent that you see changes in the economy as a result of the fiscal rescue plan. How does that all kind of work its way into the stock market? That's going to be something worth watching for sure.
Hey,
So,
go ahead. No, I just want to mention a headline crossing the Bloomberg, which plays to another big story of the year. Apple denying Parler re-entry into the App Store after a recent review. Parler cutting its iOS developer team after Apple App Store division. So you take this, and I'll give you this back. But listen, this plays to the conversations that led to the riots on the Capitol and the breaching of the Capitol specifically, and really a shutting down of a lot of social media platforms or individuals on social media platforms specifically.
And of course, to the power of Apple as a gatekeeper when it comes to what we can and cannot use on our phones. The vast majority of people have smartphones that are controlled either by operating systems from Apple or from Google. If you cannot get through their app store, you are not getting on our phones. Hey, Dave, one more question on this while we still have you. I love that this chart goes back to 2008. You do see some spikes of percentage of NYSE listed companies at 52-week highs, along with the S&P 500 index. Go back to the beginning of 2010. Of course, you see a big spike there, and you see a couple other spikes, one in 2016 as well. Obviously, the one in early 2010 is because of the wake of the financial crisis and the stocks coming roaring back after a pretty tough year. But what do those other spikes tell you, those other times that it has peaked?
Well, I mean, the reason I put the S&P 500 in there is just to kind of provide a point of reference. And, you know, you see that when these numbers are moving up over time, I mean, that tends to be a plus, you know, for the S&P 500 as well. I mean, if you want to use that as your reference point for U.S. stocks, which we generally do. So, you know, it's a matter of, shall we say, the troops going in line with the generals. I mean, that's the sort of thing that people really want to see when, you know, an index is moving up. You know, are you seeing the average stock or a broad group of stocks move higher as well? And, you know, you look back at these earlier periods, and, you know, you do tend to see the index moving up when you get a whole lot of stocks reaching new highs.
Yeah, listen, I think it's really important. And like I said, you know, in terms of where we go next is going to be key to watch. And digging down into some of the technicals, we're going to actually be talking with Randy Watts tomorrow, who is a technician and watches some of these levels to see what it means that what we've seen in terms of the tech trade specifically. What does it mean for the overall market, you know, in terms of what it means going forward? And Dave, this is kind of, especially when we're in between earnings and things, these are the kind of things that we watch for. All right, Bloomberg stocks editor Dave Wilson joining us with his chart of the day. You are listening to Bloomberg Business Week, and this is Bloomberg.
This is breaking news from Bloomberg.
Yes, indeed, we do want to take you to the White House. President Biden hosting an event with the CEOs of Johnson & Johnson and Merck in the South Court Auditorium.
You and I knew one another when I wasn't president, you weren't a chairman. Right. We'd ride back and forth on Amtrak. You lived in Philadelphia. I was commuting to Wilmington. It's good to see you both here. And thank both of you for your kind words. I want to thank scientists and researchers at Johnson & Johnson for the literal heroic effort that began when COVID-19 first spread and led to the safe and effective vaccine that are now being co-produced. Today, we're seeing two health companies, competitors, each with over 130 years of experience, coming together to help write a more hopeful chapter in our battle against COVID-19. I just had an opportunity to meet with both of these CEOs and with their senior operating officers and to hear about the work they're doing together to produce vaccine substitutes and accelerate what they call to take it to full finish. You know, what's clear is this is historic, nearly unprecedented collaboration. During World War II, one of the country's slogans was, "We are all in this together." We are all in this together. And the companies took that slogan to heart. For example, one automaker didn't have the capacity to build enough Jeeps, a competitor stepped in to help. Competing airline makers teamed up and they produced parts for each other and gave the American pilots, as a consequence of that, control of the skies. Today, we're seeing the same type of collaboration when it comes to getting this virus under control. I said we had to treat this like a war. So I want to thank the two companies for showing how we can come together and defeat this virus by putting patriotism and public health first. And I mean that literally, putting patriotism and public health first. Your companies have been working closely with a man you've both privately, and there were over bragged about, Jeff Zients. Jeff is in the front row here. I want to thank you, Jeff, and the entire COVID team you put together for the coordination of our COVID-19 response, and Dr. David Kessler and his team at the Department of Health and Human Services. You know, when I came into office, we began working with the team of J&J to accelerate and add capacity to their manufacturing and production efforts. And it quickly became clear that Merck, one of the world's leading vaccine manufacturers, was in a position to be the partner we needed in this effort, in this wartime effort. I've not hesitated to use my power under the Defense Production Act to expedite critical materials in vaccine production, such as equipment, machinery, and supplies. And it's not just Johnson & Johnson and Merck. Pfizer, Moderna also work closely with us to help speed up the delivery of millions more doses. The result is that we're now on track to have enough vaccine supply for every American adult by the end of May, months earlier than anyone expected. And today, I'm directing Jeff and my HHS team to produce another 100 million doses and purchase another 100 million doses of the Johnson & Johnson vaccine. I'm doing this because in this wartime efforts, we need maximum flexibility. There's always a chance that we'll encounter unexpected challenges, or there'll be a new need for a vaccine effort, a vaccination effort. A lot can happen, a lot can change, and we need to be prepared. And of course, we need to match the miracle of science and the skill of manufacturing with the massive logistical undertaking of vaccinating over 300 million Americans. Already we have gone from Johnson & Johnson vaccine authorization to shots in the arm in 3 days. I was telling the gentleman we were at a facility yesterday, a veterans outreach, and there were three members of the veterans community getting shots. One was getting of each of the three vaccines, and the guy in the middle, a veteran, was getting his, and I was standing about as far away as I am from you, and standing up, and he was sitting down, and as the nurse put it in his arm, he went, J&J, just one. Well, there's millions of people who are going to feel that way and be proud to be in a position that they're in ability to get the kind of help they need. 7 weeks ago, only 8% of the seniors, those most vulnerable to COVID-19, have received the vaccination. Today, 60% of the people over the age of 65 or older have received at least one shot. And that's because this is the population that represents 80% of the COVID-19 deaths. We've opened support and supported more than 500 community vaccination sites. That's more, and they're administering hundreds of thousands of shots a day. And for folks who aren't near a pharmacy or mass vaccination center, we're deploying mobile clinics like vans that go into places to meet the folks where they live. We're also supplying vaccines to community health centers to reach those who have been hit the hardest and suffered the most, especially Black, Latino, Native American, and rural communities. And this is important because we know we have more to do to ensure everyone is treated with equity and those most impacted get the care they deserve. On Saturday, we hit a record of 2.9 million vaccinations in one day in America. And beyond the numbers are the stories. The father says he no longer fears for his daughter when she leaves to go to work at the hospital. The children are now able to hug their grandparents. The vaccines bring hope and healing in so many ways. Again, a vaccinated American is the only way to beat the pandemic, get our economy back on track, and for us to get back our lives and our loved ones. You know, that's why the American Rescue Plan was so critical. I want to thank Speaker Pelosi and the House of Representatives today for passing the bill, and I will be signing into law shortly. This bill represents a historic victory for the American people. I look forward to signing it later this week. Everything in the American Rescue Plan addresses a real need, including investments to fund our entire vaccination effort, more vaccines, more vaccinators, and more vaccination sites. Millions more Americans will get tested, including home testing. Schools will soon have the funding and resources to reopen safely, a national imperative. The American Rescue Plan, the partnership between Johnson & Johnson and Merck, proves we can do big things, important things in this country. Let me conclude with this. Tomorrow night, I'm going in prime time address the American people and talk about what we've been through as a nation this past year. But more importantly, I'm going to talk about what comes next. I'm going to launch the next phase of the COVID response and explain what we will do as a government and what we will ask of the American people. There is light at the end of this dark tunnel of the past year. But we cannot let our guard down now or assume that victory is inevitable. Together, we're going to get through this pandemic and usher in a healthier and more hopeful future. So there is real reason for hope, folks. There's real reason for hope, I promise you. So may God bless you all. May God protect our troops. And may God ease the pain in the heart of so many who've lost so many people in this pandemic. Thank you, and we're going to do this. We're going to get it done. Thank you.
Mr. President, what do you plan to do with the surplus? What will you do with the surplus?
Mr. President, when will you do a press conference? The surplus will, if we have a surplus, we're going to share it with the rest of the world. We've already decided we're going to work with the outfit COVAX. We've committed $4 billion to help get the funding for more vaccines around the world. This is not something that can be stopped by a fence, no matter how high you build a fence or a wall. So we're not going to be ultimately safe until the world is safe. And so we're going to start off making sure Americans are taken care of first, but we're then going to try to help the rest of the world. Thank you.
Is there a crisis at the border, sir?
All right, so that was obviously President Biden there at the White House specifically. He was preceded by the CEOs of Johnson & Johnson and Merck. We're talking about Alex Gorski of Johnson & Johnson and Ken Frazier of Merck. You know, what's interesting, Tim, and I think most people would say, these are foes. These are competitors in big pharma, and yet they came together. J&J needed some help in terms of manufacturing. That collaboration, though, not necessarily coming on their own, but with some help and some nudging by the Biden administration.
Yeah, there's just a fantastic story by our own Josh Wingrove and Riley Griffin available on the terminal called Biden's Duo Nudge Eased Merck J&J Logjam to Speed Vaccine Output. I want to talk a little bit about
to be fair, there were, I guess, talks between the companies before the Biden administration.
Right. I encourage everybody to read that. But I want to talk a little bit about what Biden said at the end of his press conference just now, because it's something that we've talked a lot about on Bloomberg Business Week, and it's something we've talked a lot about on Quick Take as well. The fact that the pandemic could continue to rage on even if we get to herd immunity here in the United States. And that's what he was asked about at the end of the press conference. Mr. President, what are you going to do with the surplus of vaccine? If the U.S. and when the U.S. has extra, the Biden administration says that he's going to share it with the rest of the world and I'll help fund vaccines around the world. He says, quote, "This is not something that can be stopped by our fence or wall." As health experts and doctors have told us, Carol, if this continues to rage out of control outside of the United States, new variants can develop that can become more resistant to vaccines. And it would be such a shame to be sent back months with all the work that we've done about vaccine rollout here in the U.S.
We've already seen multiple waves, and I think it's safe to say, and I can speak for many, that we don't want to see another wave. Dr. Steve Corwin, who we caught up with earlier, the president and CEO of New York Presbyterian Hospital, specifically saying, about the New York City positivity rate is still at about 5%, and that we've kind of plateaued. And his concern, whether it's the variants that are having, an impact on this area specifically, these surges are certainly worrisome. And then not being able to see certainly the numbers in this area come down more dramatically like we've seen maybe in other parts of the country. And he was, when we talked about restaurants opening 50% capacity in New York and New Jersey, that he found uncomfortable.
Right. There is the tension, though, between giving these restaurants the opportunity to at least try to survive. It has been such a difficult year. But the president's saying that there is light at the end of the tunnel of this past year, and we cannot let our guard down. Together we can get through this pandemic. He's very clear, though, about saying, do not let your guard down. We have come this far, and let's continue to be careful. Tomorrow, the president is going to give a primetime address to the American people, and he said he's going to talk about the next phase of the pandemic recovery.
Yeah, exactly. And that's going to be key. Listen, getting through that $1.9 trillion COVID relief package. Some call it stimulus, some call it a relief package. But nonetheless, getting more help out to Americans and businesses, that is coming our way. And then let's not forget the president also said that he's going to buy another 100 million doses from J&J. As you said, he talked about surpluses. We'll share them with the world. But again, reiterating that there should be enough vaccines for all Americans by May specifically. And then it's just a case of getting them into the arms of Americans and people stepping up and taking them.
Just because there's vaccine doesn't mean there's been vaccinations.
That is so true. Hey, folks, we've just got about 3.5 minutes left in today's trading day. Dow Jones Industrial Average, a gain of 1.5%. S&P, a gain of just about 0.6%. And the NASDAQ, call it flat here, just a little bit lower. We've been bouncing around, but definitely off our highs and lows. The close coming your way in just a moment right here on Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Record for the Dow. An update on Wall Street. The Dow, the S&P advancing, NASDAQ slumping at the close. Folks from Women in Derivatives virtually ringing that closing bell as we await the latest numbers out of Oracle and AMC Entertainment. Equities advanced for a second day as the rotation into value stocks resumed. S&P up 23, a gain today of 0.6%. The Dow up 462, off session highs, still a gain of 1.5%. 1.5%. NASDAQ, though, a down day, fading into the close, lower by 5 points, down less than 0.1%. The NASDAQ 100 index, by comparison, lower today by 0.3%. Russell 2000 up today by just about 1.8%. So turned out to be a mixed Wednesday. As for the overall market backdrop, Kate Moore is head of thematic strategy at BlackRock Financial. She was our guest this morning on Bloomberg Radio and Television.
I think the places I would trim at this point are the areas of travel and leisure that are already pricing in 100% return to the 2019 or early 2020 activity. I think some of that stuff has gotten a little bit ahead of itself. Even as we get vaccinated and the economy restarts, it's going to take a while, I think, for business travel and some of the other activity to return to 100% pre-pandemic levels.
S&P had its best two-day rally in 5 weeks, led by financial firms and producers of raw materials. GameStop up for a 6-day, its longest winning streak. A lot of trading halts today as retail investors renewed their commitment to the stock amid optimism on the company's turnaround plans. Longest winning streak, I should add, in over 6 months for GameStop. GME up today by 7.3%. AMC Entertainment Holdings, as we await earnings, AMC down today by 6.2%. Recapping, S&P up 23, up 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
All right, folks, let's take a little bit of a deeper dive into the trade today. Charlie giving you those closing numbers, as we mentioned. S&P and the Dow bouncing around a little bit. S&P off its highs and its lows, The Dow Jones Industrial Average just off its highs of the day. Really the outperformer on a percentage basis, Tim, up about 1.5%. NASDAQ, though, just a little bit lower, just down about 5 points, as Charlie mentioned. So well off the gains that we saw earlier in the day.
Well, let's take a deeper dive into the S&P 500 and check out the Bloomberg Industry Group's energy leading the way today, up 2.6%. Financials higher by 1.9%, and materials higher by 1.6%. There was one laggard, only one in the red. Information technology down 0.4%. Healthcare up 0.2%, and consumer discretionary up just about 0.4%.
Just want to point out about a 240-point swing on the NASDAQ today. You mentioned those major industry groups in the S&P 500. 384 names in the S&P 500 gaining ground today. 120 lower, one unchanged. Let's bring in Bloomberg News cross-asset reporter Sarah Ponzek. She's with us in our New York City bureau. So, Sarah, can I just ask you about GameStop? I mean,
you got it, don't you?
I'm so glad. I'm so glad you went there, Carol.
So rally, decline. What is it? Tim brought up a really smart point. It's like, what is it that makes a stock enables it to go down so much in a single day? It sounds to me like there had to be institutional selling.
Right. So at a high of 348 down to a low of $172 in just a matter of minutes, Sarah.
It was really amazing to watch, I've got to say. Now, there has been a lot of talk about what possibly happened here. It doesn't seem like anyone has really gotten down to the bottom of this quite yet. There was some talk about possible put options placed that forced some selling. There are multiple volatility halts on the way down. There is some conjecture that, yes, maybe hedge funds were the sole proprietors of this. At the same time, on Wall Street Bets, there were some jokes going around that people were saying, you know what, get out of GameStop and bring your tendies on over to Roblox, which had its direct listing today. So many reasons out there, but no matter what, the chart of GameStop today was something that I think it's safe to say most people have likely never seen in a lifetime. And it really was quite amazing. Something that I also found pretty unbelievable today was the fact that if you do look at the options activity within GameStop today, we did see more calls traded than puts. So 408,000 calls versus 388,000 bearish puts. The call volume was just about double the 20-day average. And I'll just leave you with this. If you look at the most active GameStop option that was traded today, it was a call that expires on Friday with the strike price, listen to this, of $800. Right now, we saw GameStop close at $265. So people clearly are still liking the stock, as Roaring Kitty would say.
Yeah. So does it explain? Yeah, like I guess, I don't know. It's just kind of wild. And you're right.
It's almost unexplainable.
Right? It's going to be a case study. Stepping away from that, what else stood out for you?
You mentioned the swing that we saw in the NASDAQ 100. Today was a day, there was a lot to take into. It almost felt like an entire week packed into a day. You had what was going on with GameStop and many other meme stocks. It wasn't just GameStop today. Cost, for example, the headphone maker closed up 69%, Express up 25%. So it wasn't just GameStop that was really jumping around. But then you migrate over to the NASDAQ 100 and the stock market at large, and we really did see this unbelievable swing. It was earlier on in the day, even before the market opened, that we saw NASDAQ futures actually leading the way higher. It looks like we were going to see a day similar to yesterday in which we saw the opposite of the rotation that we were seeing, and we were going to see growth lead. We were going to see tech lead. Well, fast forward to 4 p.m., and tech was the one sector in the red. So we saw a complete reversal of what was shaping up before the market opened. And by the end of the day, you had energy, financials, materials, cyclicals, value, what we've become accustomed to really leading the way once again.
Got to be ready for moves, that's for sure, in this market. Sarah, really appreciate that. Bloomberg News cross-asset reporter Sarah Ponzak, she talked about being in the red. Oracle actually down about 3.6% here in the after hours. That company just posting their latest quarterly update. Third quarter adjusted revenue of $10.09 billion. The estimate was pretty much for that, 10.07. The board increasing share repurchase authorization by $20 billion, raising its quarterly dividend 33% to 32 cents a share, and third quarter adjusted EPS of $1.16. That's a nickel better than what Wall Street was forecasting. But again, Tim, quick check on the stock in the after hours, now down about 2.7%.
Bumble earnings also out. It's the first time the company has reported earnings as a publicly traded company. The company has fourth quarter revenue of $165.6 million, beating estimates of $163.3 million. The company sees 2021 revenue between $716 million to $726 million. And the company also seeing, first quarter revenue, $163 to $165 million, slightly beating estimates of $162.6 million for the quarter.
Yep, Bumble up 3.9%, 4.5%, 5% right now in the after hours. All right, let's get to Dave Wilson and his stock of the day. We're watching a lot of movement here in the after hours, Dave. What do you got for us?
I've got Tupperware Brands, Carol. It's a direct seller of plastic food containers and other household items. The products are sold through gatherings known as Tupperware parties and more recently over the company's website. Tupperware was founded in 1946 and went public through a spinoff in 1996. The ticker is TUP. Now, the company's shares peaked in 2013 and plunged 99% through March of last year. Tupperware later recouped more than a third of the loss. The recovery, though, was set back today after fourth quarter results were disappointing. Earnings were far below analyst estimates in a Bloomberg survey after trouncing them the past 2 quarters thanks to pandemic-driven buying. The shortfall occurred in the latest quarter, even though sales beat estimates. Now, Tupperware's disappointment stemmed from increased costs and a higher tax rate, according to Citigroup. Certainly had an effect on the stock. The shares suffered their biggest loss in 9 months and fell almost 20%.
And that was one of the big pandemic plays. Stock was up 277% last year.
If you're cooking at home, you got to store the food somewhere. It makes sense.
Exactly. And I think, I know in our house, we have gotten away from things like Ziploc and, we're looking for reusable stuff.
Yeah.
Because we think it's better on the environment. Dave Wilson, thank you so much. Have a good night. You have a good night.
Thank you. I will. I'll see you tomorrow.
Yeah. Okay. I'm counting on it.
I'll be here. Don't worry.
Need the assist. All right. You are listening to Bloomberg Business Week. Let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is applauding Johnson & Johnson and Merck for teaming up to boost vaccine supplies. Biden says he's doubling the order of the one-shot vaccine, seeking another 100 million doses.
I want to thank the two companies for showing how we can come together and defeat this virus by putting patriotism and public health first.
The order is a sign the U.S. is continuing to stockpile doses as questions rise about which vaccine will be best for kids. Biden's $1.9 trillion COVID-19 relief bill cleared its final congressional hurdle today, with the House passing the bill on a 220 to 211 vote. Democratic strategist Kevin Walling tells Bloomberg it is a feather in Biden's cap.
The significance of this bill coming in, the first month and a half of an administration, I think speaks volumes to this administration's ability to move this package through both chambers.
White House Press Secretary Jen Psaki explains what comes next.
The bill text will be rechecked, printed, and signed by the appropriate leaders in the House and Senate. The House clerks will then deliver it to the White House for the president's signature.
And the president is expected to sign it on Friday. Not one Republican in Congress voted in favor of the plan, calling it bloated and crammed with liberal policies. After failing to be considered by the Senate for the Supreme Court, Merrick Garland finally heard a yes today on becoming the nation's next attorney general.
The yeas are 70, the nays are 30, and the nomination is confirmed.
Also confirmed today, Marcia Fudge to be housing secretary. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. I'm Carol Master. Joining me right now is Charlie Pellet of Bloomberg News, and I love this story. It's among the most read on the Bloomberg terminal, Charlie, and it's about a new ETF. And basically, it wants to tap into the fear of missing out, or FOMO, among investors.
Exactly. It caught my attention, too. And as you mentioned, one of the most read stories on the Bloomberg today. There is an ETF, it seems, for everything. And these things come and go depending on what the market fad happens to be. But right now, as you say, this one here, it's the FOMO trade, a FOMO ETF associated with countless bubbles and market manias.
Wow, yeah. And listen, it's coming from the Collaborative Investment Series Trust. It intends to invest in, quote, securities that reflect current or emerging trends, according to its registration statement with the SEC. The fund is going to select its holdings based on a, quote, proprietary tactical model. But I guess, Charlie, it's going to invest in everything. It's going to target stocks across both developed and emerging markets, to SPACs, other ETFs, derivatives, volatility products, both leveraged and inverse funds, and the kitchen sink. No, I just added that in. Yeah, check it if you're listening to me.
All right, exactly. S-I-N-K. You know, my wife does the same thing. S-I-N-K.
Honey,
go.
I'm buying an island in the Caribbean. You okay with that?
Yeah, that's nice. Okay, whatever. All right. And anyway, so the filing with this ETF also notes that its tactical approach and frequent trading may result in, quote, high portfolio turnover rate, but it is an interesting concept. And our Eric Balchunas, an ETF analyst with Bloomberg Intelligence, says, quote, this ETF was pretty inevitable given the market we're in and features one of the longest risk sections I've seen in a prospectus in a long time. He goes on to say it may simply have too much going on to have a breakout.
Read that. It was just a matter of time, right?
Exactly. What I didn't see in our story here was what the ticker symbol was, because so often attached to a lot of these ETFs is a very catchy ticker.
Well, exactly. And the thing is, there's no guarantee it's going to go to market. So we're going to have to watch, whether or not this ultimately comes through. But great read, great story. Charlie, thank you so much. And listen to your wife.
Exactly.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. Here's what we've got. Oracle's third quarter adjusted revenue, $10.09 billion. Estimates, $10.07 billion. Oracle raising its quarterly dividend 33% to 32 cents a share. Oracle, after hours, trading lower by almost 4%. Also reporting earnings after the closing bell. Bumble, we've got that stock up after hours. Bumble trading higher by just about 5%. Turned out to be a mixed day on Wall Street. We did see a record for the Dow Jones Industrial Average, an up day for the S&P, a down day for the NASDAQ Composite Index, NASDAQ fading late in the day. Truth of the matter is, for much of the session, we did have NASDAQ swinging between gains and losses. 10-year yield, 1.52% right now. Equities advanced as the rotation into value stocks resumed following a weak inflation report. Treasury yields turn lower after a 10-year note auction. For the S&P, best two-day advance since early February, up 23 points today, up 0.6%. The Dow up 464, up 1.5%. NASDAQ down 5, a drop there of less than 0.1%. Again, the 10-year yield, 1.52%. Should mention NASDAQ Composite Index lower by less than 0.1%, but the NASDAQ 100 Index down 0.3%. Russell 2000 rallied today by 1.8%. Gold up 0.5%, $17.24 the ounce. West Texas Intermediate crude up 1.1%, $64.70 a barrel. Again, recapping Oracle lower after earnings. Third quarter adjusted revenue $10.09 billion. Estimates there $10.07 billion. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so if you want to know what's on the mind of financial folks, Wall Street folks, Bloomberg terminal users, this is it, because this is our most read story on the Bloomberg terminal in the past 8 hours. It's about the A-listers who increasingly seem to be heading south during the pandemic. We've seen that over the past year, but they're now maybe saying, maybe I'd like to come back. Let's get into it with Jonathan Levin. He is Miami Bureau Chief at Bloomberg News. He's with us once again on the phone in Miami. Jonathan, good to have you here. Love this story. So set the scene. Remind us, because we've done the story a couple of times. A lot of people, especially big financial types, they have been heading south.
That's right, Carol, and thanks for having me. Yeah, so the story was essentially, when the pandemic got really bad, everybody was leaving Manhattan. You all know this. And a natural sort of destination became Palm Beach, perhaps Miami Beach to a certain extent. And the thinking was, wealthy people always had an incentive to be in a place like this. It's sunny, it has no state taxes and so forth. But then the work from home environment really enabled, sort of a sea change, or at least it seemed like that. And for a time, you walk down Worth Avenue in Palm Beach, and it felt like, wow, this is where it's at. So, of course, our story today is about how
well, we're talking about
bump the brakes a little bit.
To be fair, we're talking about folks like Steve Schwartzman of Blackstone. We're talking about David Solomon, the head of Goldman Sachs. I mean, we're talking about heavy hitters.
Yeah, exactly. These are A-listers. And, the interesting thing about it is if you look at what was going on in 2020, we haven't gotten to 2021 just yet, but if you look at what was going on in 2020, it really was sort of an exclusive set. Like we talk a lot about migration, but we FOIA'd Postal Service data to try and get a sense of what was going on here ahead of the official census estimates coming out. And, as one could understand, cross-state moves were actually way down in 2020. We were in the middle of a pandemic. People didn't want to hire a moving truck and try and move somewhere. But it was, when you really zero in to this sort of elite demographic, the type of folks that might have been moving from Manhattan to Palm Beach, the demand for these kind of moves stayed pretty robust in spite of all the obstacles. So that was quite interesting in 2020, and now here we are in 2021, and maybe the durability isn't quite there.
Well, it's fascinating that in this high-tech world and algorithms and artificial intelligence and all that good stuff, you went to U.S. Postal Service data.
love that.
Yeah, and you know, and the caveat of course is there's no perfect data set for this. That's why we have and love the U.S. Census Bureau, and it's worth waiting for their stuff. The Postal Service data, you could say, like, you know, how many kids under the age of 40 these days are writing letters, right? So maybe they're not filing chains of address forms with the post office. It's not a perfect data set, but we think it's a pretty good proxy.
No, it gives you an indication. Well, what's also fascinating about your story, as we've been so focused on people going down south to, you know, as you said, Palm Beach and the Miami area, or people going to Austin, the story says more Manhattanites relocated to Jersey City, Los Angeles, Philadelphia, Chicago, and Hoboken, New Jersey than they did to either Miami or Palm Beach. That's wild.
Yeah, and that's, you know, it's actually pretty typical.
Oh,
you
is
know,
it? Okay.
So, you know, the trend line was up for Palm Beach. I don't want to say the trend line wasn't up, but the bigger story is, like, people at that time were looking to get out of Manhattan, so they went to a lot of different places. Like, as you said, they went to Connecticut, and that's a reason for us to pump the brakes a little bit on the tax migration aspect of it, because, you know, they did go to Florida, but they also went to plenty of places that didn't necessarily help their pocketbook.
Right. And listen, let's not forget that there's a lot of reasons why people are willing to put up with the congestion, the higher taxes of New York City. There's an incredible, you know, pre-pandemic, post-pandemic cultural scene. There's incredible education. There's just so much here.
Yeah, I mean, you know, you could probably say more about that than I can as the resident Floridian here. You know, I didn't love some of the knocks in our story against my home state, but, you know, I guess that's the way New Yorkers, elite New Yorkers, feel about the situation.
Well, I have to say,
away.
There's a great quote, and I'm really sorry because I know it is your home state. As somebody is actually tweeting to me, a loyal listener, head south and you get snakes, gators, and, you know, other things. No thanks, no taxes or not. But there's a quote in your story that kind of speaks to also the main problem with moving to Florida is that you have to live in Florida. That was from somebody in your story.
Yeah, you know, I mean, look, I think there is this sense, and everybody in the country understands that there's this magnetism about New York, and, you know, you're not going to build another Manhattan overnight.
Listen, a great story, as I said, the most read on the Bloomberg terminal in the past 8 hours. This is where everyone's flocking to. When you speak about migrations, that's where they're going to read. Hey, Jonathan, good stuff. Jonathan Levin, Miami Bureau Chief at Bloomberg News, on the phone from Miami. Check him out on Twitter at Jonathan J. Levin. You're listening to Bloomberg Business Week. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, folks, really looking forward to our next interview because there's been a bunch of serious cybersecurity breaches, including one, a Bloomberg exclusive that we talked about yesterday about surveillance cameras. We talked about that earlier on our broadcast. We're going to check in, though, with the CEO of Fortalice. She's going to join us, Teresa Payton, in just a second. First up, though, back to your top business story, some of that news after the close. Once again, Charlie Pellet.
Hi, thank you very much. Cannot ignore Oracle. Shares are lower. It did report quarterly revenue in line with analyst projections. Right now, Oracle down about 2.6% after hours. This on projections about recovering demand for business software and cloud services. The results disappointing investors, sending shares up to a record earlier this week. The stock, though, is declining right now in extended trading. Executive Chairman Larry Ellison and CEO Safra Catz have been trying to boost sales of the world's second largest software maker by accelerating a shift to cloud-based software for services such as accounting and human resources, while growth wanes in the company's older flagship database business. Equities did finish the session mixed today. Turned out to be an up day. In fact, a record and a close above 32,000 on the Dow today. Let's begin there with the Dow up 464 points, up by 1.5%. S&P did advance by 23, up 0.6%. NASDAQ late day fade, finishing the session lower by 5 points, down by less than 0.1%. NASDAQ lower by NASDAQ 100 index down today by 0.3%. The S&P, however, did notch its best two-day advance since early February, led by financial firms and producers of raw materials. As for gold, up 0.6%, $17.25 the ounce, and West Texas Intermediate crude up 1.1%, $64.72 a barrel. So big days like this for a lot of indexes and averages means it is important to stay invested. That according to Kristen Bitterly, head of capital markets at Citigroup Global Markets.
It is impossible to time the market. So if you miss the 5 best days year to date, you basically have a -7. It's a 7% hit to your overall return. If you take that to all of last year, you would have gone from a U.S. equity return of +18% to -18%.
And a headline from the Bloomberg Professional Service, Brazil breaches a 2,000 daily COVID deaths in back-to-back records. So again, Brazil breaching 2,000 daily COVID deaths. As for the market, again, recapping, S&P up 23 today, a gain of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Right, on a day where we see global cases passing 117.8 million. All right, Charlie Pellet, thank you so much. So I do want to get to our next guest because, as we mentioned earlier, among our most read stories on the Bloomberg in the past day is about the group of hackers who breached a massive trove of security camera data. We talked about it earlier with Bloomberg News reporter William Turton. He broke that story. This is coming on the heels of 2 other major hacks that we've already seen involving Microsoft. And of course, earlier we saw certainly the other one that tapped into government, also tapped into the private sector. So let's get into it and see what Teresa Payton has to say. She is former White House Chief Information Officer, first woman to do so. She's CEO at the cybersecurity advisory and strategy firm Fortalice, and she joins us on the phone from Charlotte, North Carolina. Teresa, so great to have you back. I've been looking forward to this conversation. How are you?
I'm doing well, Carol. Thanks for asking. And I've been looking forward to the conversation as well. It's always a good one. You ask great questions, and the conversation hopefully is always really great for your listeners to give them some points to take away back in their business and personal life.
Well, and I think that's such a great thing to bring up, because I think at this point, I talked with Tom Siebel yesterday, of founder of Siebel Systems, and A3CI, or an A3AI, C3AI, I'll get it out. What's interesting is that we're seeing increasingly serious cybersecurity attacks come out. And the one with the surveillance cameras was by a group that kind of wanted to just raise the attention of, how many surveillance cameras there are out there and essentially how easy it is to tap. What is the conversation that we're not having that you think we need to be having around these attacks?
Yeah, I mean, this particular attack, although it's incredibly unfortunate because personal and confidential information was surveilled, and these hackers alerted everybody and turned most everything over. But what does that mean for other hackers who potentially took advantage of this super admin access, this password that was out in password dumps of past data breaches? They're probably not the only ones who took advantage of that type of access. And so what does that mean? So a couple of things. This is an avoidable situation. Having super admin accounts should be incredibly rare, and this password should be changed very frequently. That can be a great way to avoid something like this from happening, or to at least minimize the damages from the surveillance. The other thing that all companies can do, not just for cameras, but for employee access and very critical information access, is create a login behavior analysis where you look at behavioral patterns. What times of day does this particular user or system log in? What's the internet services provider they usually log into you from? What operating system, what type of device is being used? All of those can give you some baselines and some clues because you and I are creatures of habit. Mm-hmm. And when you see an anomaly, that could be a warning that that is not the system or the person who's the authorized user. It could be somebody else.
It's interesting, too, because I find if I log in on certain accounts and they're like, wait, we don't recognize this device that you're on, I certainly get a red flag. I feel like this should be the norm. Is it not the norm? And you talk about the, admin account. It just sounds like these are basic cybersecurity steps to be taken, but if you look across the country, are we not doing it? If we look across government, are these not being kind of normally done?
Yeah, oftentimes it's not being done, and the burden rests squarely on the shoulders of businesses, government organizations, and users. I mean, in this particular instance, you would think if you're buying a security camera, it should be secure out of the box. But the burden is actually on the business to say, well, wait a minute, let's make sure it doesn't have a default password. Well, wait a minute, let's make sure we have logging behaviors. All of those things, many businesses who don't do cybersecurity for a living expect that to be in there out of the box. And I keep asking the question, well, why isn't it? Why do we continue to put this burden on the purchaser of the technology? So that's a big reason why it's still missing from sort of daily operating routines of many organizations.
Yeah, I think that's a really, really key point. And if you are going to do it that way, let's make sure that purchasers really know what they're getting into and how to deal with it. Because I think there is an assumption that, okay, I'm set to go, I'm secure. Sit tight, Teresa. We'll come back and talk some more. Because I do also want to get your thoughts on how we are becoming kind of overly surveillance type of society and whether or not that is a good or bad thing. So we'll continue in just a moment. Teresa Payton, we'll get right back to you. She's the CEO at Fortalice, joining us from North Carolina. Right now, though, another check on world and national news with Nancy Lyons. Hey, Nance.
Hey, Carol. The House today approved the massive stimulus bill, with Speaker Nancy Pelosi announcing the tally.
On this vote, the yeas are 220, the nays are 211. The motion is adopted.
It includes $1,400 checks, it extends unemployment benefits, and provides more money to the hardest hit businesses. President Biden thanked Pelosi and Senate Majority Leader Chuck Schumer for leading the push.
This bill represents a historic victory for the American people. I look forward to signing it later this week.
He's expected to sign it on Friday. Republicans had argued that the $1.9 trillion price tag is too large and that the bill is filled with pet projects unrelated to COVID relief. Well, the Senate today has been busy as well, confirming some of President Biden's cabinet nominees, including Merrick Garland to be Attorney General. He was confirmed by a vote of 70-30. Senate Majority Leader Chuck Schumer says he's an excellent choice.
America can breathe a sigh of relief that we're finally going to have someone like Merrick Garland leading the Justice Department, someone with integrity independence, respect for the rule of law, and credibility on both sides of the aisle.
Also confirmed today, Marcia Fudge is housing secretary. The Biden administration is defending its new border policies. Border advisor Roberta Jacobson says the border is not open, even though border crossings have increased since Biden took office. She says they're working to implement new policies. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, a little levity here. Maybe it's not levity. I don't know how to say it. But next time you look at your mortgage, be glad that this isn't your mortgage, because there is a massive Charlie pellet, a massive LA hilltop mansion. It's got an asking price that once was about $500 million, and now it's in default.
Indeed, an $82.5 million loan for the one. That is the name of this mansion. How big is this mansion, by the way? 100,000 square foot home.
What do you do with all that space? Like, how do you vacuum all that space? How do you dust all that space?
Well, I can tell you, at the Pellet household, we have a lot of people that take care of those kinds of things. A lot of big parties. They all come over for the view. But anyway, you've got...
it's a massive room dust.
It really is. But developer film producer Nal Naimi is delinquent, according to Don Hankey, who advanced the money in 2018 and filed the default notice. But yes, what a massive property it is. Worth repeating, 100,000 square feet.
Now, I talked about, you open up your mortgage bill and you're like, okay, yeah, I got that. The debt on that property, I think you said, right, has climbed to $110 million with unpaid interest, apparently. And I guess the LA financer, whose biggest source of lending is subprime auto loans, telling our team, John Gittleson specifically, not only myself, but other people he owes money are trying to force him to list the property. Like, sell it. We want some money back, basically.
Indeed. But big picture, sales of these luxury homes in Los Angeles have been thriving, according to our story, as home buyers seek more space, because I guess 100,000 square feet isn't enough, while taking advantage of record low interest rates. Median price of a luxury LA home, top 10% of the market, climbed 11.6% in the fourth quarter from a year earlier to $10.7 million, according to the appraiser Miller Samuel.
Listen, people like Jeff Bezos, they're pumping up those prices. He paid $165 million. That was a California record for a Beverly Hills estate. He bought that, I guess, from David Geffen. And then the billionaire co-founder of WhatsApp paid $125 million for another Beverly Hills mansion sold by Jeffrey Katzenberg. That's what's driving up these prices.
Unbelievable. What a property, though. It is gorgeous.
Glad it's not my mortgage. All right, Charlie, thank you so much. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the closing bell. Oracle reported quarterly revenue that was in line with analyst projections on recovering demand for business software and cloud services. Oracle shares trading lower now, down by about 2.5%. AMC Entertainment Holdings, the largest movie theater chain in the world, posted a fourth quarter loss that was smaller than analysts expected. A cinema reopening spurred better performance than in the previous period. AMC Entertainment down by 0.5%. Bumble, the owner of the dating app where women make the first move, gave an outlook for revenue in the first quarter that was slightly better than analyst estimates, reflecting optimism that a waning coronavirus will encourage people to ramp up their social lives and want to meet new friends or partners. Bumble up after hours by about 3.5%. It turned out to be a mixed Wednesday here. We had the Dow Jones Industrial Average advancing to a record up 1.5% today, up 464 points, closing at 32,279. The S&P up 23, higher by 0.6%. NASDAQ, though, slumping 5 points, down less than 0.1%. So stocks did move higher. Technology shares lagging today as the rotation into value stocks continued. NASDAQ 100 index down 0.3%. 10-year yield 1.51%. Gold up 0.6%. 17.26 the ounce. Crude West Texas Intermediate up 1.1%. 64.69 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. We're talking about Teresa Payton, former White House Chief Information Officer and CEO at the firm cybersecurity advisory and strategy firm Fortalice. She's still with us on the phone from Charlotte, North Carolina. Teresa, when you look out at our world, and I think about even my home, these smart homes, right? And we talk about smart cities and all these things that are in many ways making our world more connected, easier in some regards, but I wonder how much it's making it more vulnerable to our world easily being shut down. How do you see it?
Yeah, I mean, I do believe we have reached sort of this critical mass where technology is truly ubiquitous. I mean, to the point where you don't even realize it's there, between the smart devices in your home, the cameras in your laptops, your tablets. Maybe you have a camera on your door. Maybe you unlock your door using an app on your phone. All of those different conveniences and advancements we have in our lives that some of us have learned, you know, like you can't live without them for many people, they are collecting patterns of life. And so the challenge that we have is our inability to secure data, a la this camera hacking, a la SolarWinds, Microsoft, you know, name the last 15 organizations that have been victims of a cybercrime. That data, as it gets collected, could in fact in the future be used to do a digital walk-in on your life or mine. Those